Okay, let's unpack this. Today, we're doing a deep dive into the Hershey Company. We've got their recent earnings call, the press release, looking at their second quarter 2025 results and, their strategic outlook. Our mission for you today is really to pull out the most important bits of knowledge, the insights, maybe some surprising things shaping the future for, well, one of the biggest snacking companies out there. We'll hit the big numbers, of course, but also dig into those strategies, the innovations, even leadership changes behind it all.
Right. And what's really compelling here, I think, is seeing how a company like Hershey navigates everything. You've got market opportunities, sure, but also these big challenges, things like commodity inflation, tariffs, and all this happening while they're managing a major leadership transition. It's about connecting those operational dots, with the wider economy.
Okay, so let's start with that big picture then. How are things looking for Hershey overall? Well, seems they're feeling pretty positive about the second quarter. They're seeing good momentum, they say, and first half net sales growth. If you smooth out some temporary factors like inventory shifts from that big system upgrade they did
Huh.
and Easter timing, it actually beat their own expectations, came in at 1.7%.
Yeah, and connecting that to the bigger picture, like you said, it really shows how resilient that core business is, even with some complex accounting stuff going on. I mean, look at Q2 alone, reported net sales up 26% year over year. That's $2.61 billion. And their organic constant currency net sales, basically, for you, that's their underlying growth without currency swings or acquisitions messing with the numbers. That was up 26.3%.
Right.
Now, a lot of that volume jump comes from comparing against last year, what they call lapping. Specifically, Q2 2024 was when they had that big ERP system implementation, like a huge software upgrade across the company. And that led to planned temporary dips in inventory.
Ah, okay, so the comparison base was lower.
Exactly. That plus Easter being later this year and some customers wanting Halloween orders early, it makes this quarter's growth look particularly strong.
Got it. Okay, now here's something really significant, right?
Yeah.
The leadership change. Michelle Bach, CEO for 9 years with the company over 20. She's announced she's retiring. And they've already named a successor, Kirk Tanner. Looks like he has over 30 years in the industry. He's the next president and CEO starting August 18th. And Michelle Bach is staying on for a bit in an advisory role for a smooth handover.
Yeah, that's right. And that naturally makes you ask, okay, what does a big leadership shift like this mean for strategy, for priorities? Well, interestingly, the outgoing team, they've been really consistent talking about balanced growth and taking steps, proactive ones to handle that cocoa inflation. Things like productivity, efficiency, strategic pricing. And it sounds like the plan is for the new CEO, Kirk Tanner, to basically continue that direction, build on it.
Okay, makes sense. So let's pivot to North America then, because you said there's a lot happening there.
Oh, yeah. This is where a lot of the, let's say, dynamism is. The U.S. confectionery and salty snacking parts are doing really well. U.S. retail sales for candy, mint, gum jumped, wait for it, 21.8% in the 12 weeks ending June 29th.
Wow.
Yeah, and that led to a market share gain of about 90 basis points. That's nearly a full percentage point gain. Pretty significant.
And what's driving that? Is it specific brands?
Well, if you break it down, what's insightful is the everyday chocolate takeaway. It accelerated to 6.7% growth. That's the highest it's been since mid-2023. And that really says something, doesn't it, about how relevant chocolate still is day to day. They even hinted that, maybe people eat more chocolate when they're stressed.
Interesting observation.
And yes, the core brands are definitely powerful. Reese's, up 4%. The classic Hershey bar, up nearly 8%. Kit Kat, up 3%. A lot of that thanks to things like summer limited editions, media campaigns. Even their wider variety stuff grew 2%. So Cadbury, Whoppers, York, Heath, they're all contributing too. It's not just the big names.
Right, breadth and depth.
Exactly. And their strategy to grow the non-chocolate sweets portfolio, that's really paying off too. 14.8% growth there, about 110 basis points of share gain. And that leads to some fun innovations like the Shaquille O'Neal Shackalicious XL gummies.
Shack gummies, seriously.
Yeah, shaped like sneakers, flavors like strawberry, lime, mango, and they're doing this whole experiential marketing thing, literally dropping a giant sneaker painted in gummy colors somewhere. It's about creating buzz.
That's pretty clever marketing.
Yeah.
Okay, but hang on, there's another big one, right? The Reese's and Oreo thing.
Yes. The Reese's Oreo Cup. You've got America's #1 candy, Reese's, teaming up with the #1 cookie, Oreo. They're calling it a powerhouse brand partnership. And the whole idea is to drive trial, get people buying it again. They'll have joint displays in stores, media campaigns, and a lot of the focus is on those bigger take-home packs.
Makes sense. Drive that volume.
Right. And it's not just about new products. They talked about their gold standard planogram principle.
Planograms, that's like how stuff is arranged on the shelf.
Right. Exactly. Think of it as Hershey's super optimized, data-backed blueprint for shelf layout. And it works. They said 2 major customers adopted their recommended take-home planograms, and boom, average 8% category growth in the next 2 months, 40 basis point share gain for Hershey. They're expecting pretty wide adoption by spring 2026, like 60% of convenience stores, over 60% take-home aisles. Shows the power of just putting things in the right place.
Fascinating. Okay, what about the salty side? You mentioned that too.
Yeah, salty snacks are also crushing it, you could say. Hershey actually led in share gains among the top 10 salty snack makers. Skinny Pup consumption was up 4%, gained 50 basis points of share. They mentioned new packaging, the Jennifer Aniston campaign.
Oh, right. I think I saw that.
Yeah. Plus new flavors, avocado and lime. And get this, Harry Potter butterbeer flavor.
Butterbeer popcorn. Okay.
And in DOT's pretzels, up 13%.
Yeah.
Huge gain. Over 200 basis points of share gain there. Driven by barbecue flavor, summer promotions. Even their salty variety packs jumped 32%.
So North America sounds like a real engine right now. What about internationally?
Well, internationally, it's a bit more mixed. That segment actually came in below expectations. Few reasons. Unfavorable currency rates hurt their reported sales. Mexico's category growth was a bit softer, and less demand for exports. But it wasn't all bad news. They saw double-digit constant currency growth in Brazil, mid-single digits in Europe, especially the UK.
And Reese's is growing internationally too.
It is. That's a bright spot. They called Reese's a global juggernaut, nearly 8% international growth in the first half. And they've got plans, like a Halloween tie-in with the Scream movie franchise, so definitely pushing it globally.
Okay, so you've got strong North America, mixed international, but overarching challenges too, right? Like raw materials, cocoa prices.
Absolutely. That's a key thing for any company like this. Cocoa prices are still really high, historically speaking, and volatile, bouncing around. Even though prices have come down a bit this year, Hershey still expects cocoa costs to be inflationary in 2026.
So what are they doing about that, besides hoping prices fall?
Well, they're being strategic. They have robust hedging practices, basically using financial tools to lock in prices ahead of time. And that means they secured their 2025 cocoa prices way below what the market is asking right now. That's huge.
Smart move.
Very. And on top of that, they're taking new pricing action. Across the entire U.S. confection portfolio, that's like 80% of their total sales. They figure this will add about 16 percentage points of pricing benefit to the company overall.
16 points. Wow. Will that hurt sales volume?
They don't think significantly for 2025, and they stress that over 75% of their items will still be under $4. So trying to manage that affordability perception.
Okay, pricing and hedging. Anything else on the cost side?
Yes. They're also doing this thing called smart complexity. It's essentially about simplifying things, packaging, maybe trimming down the number of slightly different products, all to make manufacturing more efficient. And this ties into their bigger transformation program, Advancing Automation and Agility, or AAA. They actually raised the savings target for that program from $350 million up to $400 million.
So finding more savings.
Finding more savings. And all these things together, the pricing, the hedging, the efficiencies, they expect it to boost their adjusted gross margins back up by over 500 basis points, so 5 percentage points, in 2026.
Okay, quite the turnaround plan for margins.
Yeah.
So let's look at the overall financial outlook then. Net sales outlook is unchanged.
Unchanged, yeah. Still expecting at least 2% growth for the full year. And they see it accelerating in the second half, maybe 2% to 4% growth then, driven by innovation, seasonal stuff.
But the earnings? The adjusted EPS guidance, that's down quite a bit.
It is. That's the headline change, really. Now expected to decline between 36% and 38% for the full year.
Whoa. Why such a big drop?
Primarily, they say it's down to two things: higher taxes and the current tariff policy. And here's the kicker. They explicitly said that without those tariffs, they actually would have raised their full-year adjusted EPS outlook.
That really underlines the impact, doesn't it? These external factors.
Absolutely. It shows how things like trade policy can directly hit the bottom line, even for a huge company. Forces them to adjust.
So how much are we talking with these tariffs?
For the full year, they're budgeting somewhere between $170 million and $180 million just for tariff expenses. They mentioned hoping for some relief on cocoa tariffs. I mean, you can't grow cocoa in the U.S., but they aren't banking on that happening in 2025. They're already planning how to mitigate this longer term if the tariffs stick around.
Okay. And that feeds into the gross margin outlook too, I assume.
Exactly. Adjusted gross margin expected to decline about 675 to 700 basis points this year. That's at the high end of what they previously thought. And it's largely because those second half tariffs are basically wiping out the benefits from their pricing actions, the cost savings, and those good hedging positions they secured.
Hmm. It's a tough balancing act. And what about using their cash, capital allocation?
Well, the focus seems to be squarely on acquisitions right now. They just bought Fulfill North America, and they've got the deal pending for Lesser Evil. So because they're prioritizing that kind of growth, they said they don't expect to buy back any of their own shares this year.
So M&A over buybacks for now.
Yep. It signals where their long-term priorities lie, even with these near-term pressures. They seem pretty confident that all the actions they're taking, productivity, cost-cutting, pricing, will set them up for balanced growth again heading into 2026, despite the cocoa costs and tariffs hitting earnings right now.
Okay, so wrapping this up,
Hmm.
what's the big takeaway for you, for our listeners? It sounds like Hershey's navigating a really complex world, like a lot of companies, juggling opportunities and some pretty big headwinds. But the results show they're, well, resilient, clear focus on innovation, managing costs tightly, and a definite plan for growth.
I think that's right. This deep dive really shows you how a company uses its strengths, those iconic brands, bold partnerships like the Reese's Oreo one, but at the same time, how they have to tackle major economic challenges head on. Tactical pricing, big efficiency drives like smart complexity and AAA. It's a multifaceted approach.
It really makes you think, doesn't it? Looking ahead. How might these strategies for Hershey's using, the aggressive innovation, the hedging, the direct price increases, the efficiency focus, how might that play out or influence other big consumer goods companies, especially as they're probably facing pretty similar challenges in this constantly changing market, something all over.